Looking to build a portfolio from scratch or add ETFs to your existing holdings? Trying to decide what to invest in for 2021? This video will break down my personal choice for the top 5 Canadian ETFs to invest in for 2021. This video is obviously geared for a more beginner type of investor, someone looking for a set it and forget it style of investing. I'll also be giving alternative ETFs based on your risk profile at the very end of the video. Please note, ETFs invest in many stocks, so when choosing multiple ETFs to invest in at the same time, obviously there's going to be some overlap. Some ETFs will own the same stocks. I know that, you'll be fine. Indirectly owning Apple in 2 different ETFs is okay. If you need an introduction to ETFs and the different accounts or investing styles for Canadians, please check out my 2 previous videos to build a base level of understanding before jumping into this one. Please remember to subscribe to the channel and thumbs up if you like the video. The first ETF is VEQT. This video could end right here just with this ETF, but that's no fun. This is Vanguard's all equity portfolio. That means all stocks, no bonds, no fixed income. This could be defined as risky since it's all equity, but since you're investing in the entire world over the long term, I think you'll be fine. It was created less than 2 years ago, and it states that they pay distributions annually, just once a year in December. Technically, there's only been 1 distribution paid so far, but it might be 2 by the time this video comes out. You can see exactly what they're invested in. It's mainly other Vanguard ETFs, but it's providing worldwide coverage. Take a look at the breakdown between countries. 71% in North America, I know that's not a country, with the remaining between obviously the rest of the world, but Japan and Europe look like the biggest chunks. I mean, this is as diversified as they come, over 12,300 holdings. That means this ETF has you indirectly invested in over 12,300 stocks all over the world. My recommendation is hold VEQT as 5% of your entire portfolio. You can either hold it in your RSP or TFSA. Next up is mandatory for every portfolio, the S&P 500. Canadians have many choices like VFV, VSP, XSP, and ZSP, just to name a few. All of these ETFs mimic the S&P 500, or the largest 508 companies in the US. The largest holdings are Apple, Microsoft, Google, Amazon, Johnson & Johnson, and soon to be Tesla actually. My personal choice is VSP. This one is hedged to the Canadian dollar, meaning regardless of the CAD USD fluctuation, your investment won't change. It will only change relative to the actual stocks. If you want non-hedged, you can choose VFV. But it's not my choice. I only want to worry about stock risk, not currency risk. The ETF has a quarterly distribution yield with around 1.4%, but you're not buying this for the dividends or distributions. That's just a perk. You're here for the capital appreciation. That being said, this should be the biggest and most important part of your portfolio. I would hold around 45% of my entire portfolio in VSP. I do recommend holding this in a TFSA or RSP, even though there are some losses due to withholding tax, which I explained in a previous video. Next up, XIU. Since half my viewers are Canadian, and I'm Canadian, I'm obviously a little biased. My next choice is XIU. This is the Canadian version of the S&P 500, I guess. XIU invests in the top 60 Canadian companies, so you'll get heavy exposure to banks, utilities, and real estate. They pay distributions quarterly. The yield is currently 3.06%. Many of the holdings here have been beaten down in the past year, except Shopify. I expect a strong rebound in 2021. Not just rebounding to previous prices, but I see these Canadian stocks hitting new all-time highs, and every Canadian investor should be on this train. This ETF already experienced a great 10% rally in the past 3 weeks ever since the vaccines were announced. I recommend holding at least 25% of your portfolio in XIU and hold it in a TFSA or RSP as long as it's tax sheltered. Second last is VIU. I was debating between XAW and VIU, but decided XAW, while it's a great ETF, it has way too much overlap, so I skipped it. But it's still a great choice for diversification if you're interested. VIU gives you exposure to all companies in developed countries excluding North America. Since I'm already recommending to be heavily invested in VSP and XIU, which are US and Canadian markets, it only makes sense to choose an ETF which excludes them to avoid too much overlap. This ETF holds almost 3,750 stocks and pays a quarterly distribution. The yield is a modest 2.44%. But again, you're not holding this for the dividend, you're here for the capital appreciation. Since this was chosen to give your portfolio exposure to other countries and other markets, let's take a look at what you're actually invested in. Japan is 25%, UK is 13%, and even some Australian stocks at 7%. If you're wondering what companies those are representing, we can see Nestle, I actually thought that was American, Samsung, Toyota, SAP, and so on. I would only recommend investing in 15% of your entire portfolio in VIU. I'm super biased towards North America. I know I should probably be allocating more to the rest of the world, and considering China will be big in the future, but when I'm looking at the next 5 years, my crystal ball doesn't see anything else other than invest in North America. If your tax sheltered accounts such as the TFSA or RSP are already full with the other ETFs I mentioned, you should hold this in a taxable or margin account. Don't hold this ETF in a tax sheltered account if it means VSP or XIU are being taxed. You'll only be hurting yourself in the future. This last one is probably the most controversial. Many people won't like it, but it's my video. I'm recommending holding XDIV in your portfolio. XDIV only invests in a small number of high yield Canadian stocks. It's only investing in 20 companies and they all have steady or increasing annual dividends. I'm a sucker for dividends, what can I say, especially monthly. This ETF pays a monthly distribution and the annual yield is 4.7%. Looking at the top 10 holdings, Bank of Nova Scotia, CIBC, Manulife, Sun Life, Fortis, all have been consistently paying dividends, and even the banks have been increasing their dividends for the past 9 or 10 years. I like this ETF because all these companies have strong balance sheets, above average yields, and low volatility. I do think this is the more conservative or safer ETF I've recommended. I would hold this ETF at 10% of my entire portfolio, ideally in a tax sheltered account, but only after VSP and XIU have been tax sheltered first. That makes 100%. Those 5 ETFs will treat you well, but if you noticed, everything is a company, nothing is fixed income or bonds. I'm not a fan of bonds. I'm not a fan of earning a very safe but low fixed income. So this portfolio might be a little risky for some investors, but that's fine. I have some recommendations for a little more conservative portfolio if you're interested. If you want a safer, less risky portfolio, I would include VGrow. This is pretty much 20% bonds and 80% stocks. So you have 20% risk-free fixed income in there. You can swap this with VEQT or VSP that I recommended earlier. If you want to go even safer, I would go with VBAL, which is 40% bonds and 60% stocks. That means 40% is risk-free, but also the returns won't be as good. My last comment, I wouldn't choose any of these other Vanguard ETFs. I'm not interested in 60% bonds or 80% bonds. What's the point? You're not making good returns? I just don't see the point. I'm interested in hearing your opinions about this portfolio. What would you add? What would you remove? What would you swap out with another one? Like, I'm choosing a lot of Vanguard like VSP, but would you choose XSP? Let me know. Obviously, some people might just recommend investing 100% in VEQT or VSP. You know, you're investing in the entire world or the largest 500 companies in the US, which is fine. There's nothing wrong with that. But I find doing it this way, the ones I've chosen, is just a little more fun. You're a little more active or involved in it. This isn't the ultimate one-stop shop for ETFs. I might make a video on that a little later on. Some people might want to swap out XDIV with something more growth-oriented, which is fine. Let me know of any other topics you'd like covered or stocks you'd like analyzed. I should be able to squeeze it in. I'm trying to get to 5,000 subscribers by December 31st. I'm 1,000 away, so wish me luck. Thanks, guys.